Well, President Donald Trump has been accused of playing grand 4D chess lately. You have to wonder if the billionaire real estate mogul is not only competing in a chess match against the world, but also playing backgammon, checkers, Risk, and hungry hippos blindfolded, arms tied behind his back, and underwater without an oxygen tank. Not my words, but the words of Andrew Moran, economics correspondent for LibertyNation.com. And Andrew joins us now to discuss the president's escalating efforts for a trade deal with China and the condition of the nation's and the world's economy. Hello, Andrew.
Hello. Thank you for having me.
My pleasure. I appreciate it as always. So what is the case for Trump playing 4D chess, so-called, with China, as opposed to the opposing view that he doesn't know what the hell he's doing and igniting a trade war that will damage the economy in the run-up to his own election campaign?
Well, mind you, this is just a hypothesis because nobody knows what's going on in President Trump's mind. My theory goes like this, and all our viewers, please bear with me because it could be as confusing as the plot to Raymond Chandler's The Big Sleep. So he's demanding lower interest rates to funnel cheap money into the economy. Then this would boost growth for another few months. Now he's demanding 3 more rate cuts, which should be good until at least the next election. A day later, he shocks markets by slapping new tariffs on the rest of the, I think, $300 billion in Chinese goods. He says that's because China's not buying enough agriculture and it's not stopping the flow of fentanyl into the United States. This sends the yuan completely spiraling out of control. It gives him the ammunition to say, hey, China is a currency manipulator. And so Fed, look out, you have to now lower the dollar too. He even admitted this in a recent tweet that he doesn't like a strong dollar. So what does the central bank do? It cuts rates, again, weakening the buck. So perhaps this is why he shifted his opinion from loathing low interest rates during the campaign to suddenly becoming an advocate for them. But, who knows? This is, from what we've seen since Trump became president, it's interdimensional chess in addition to playing a few rounds of gin rummy and backgammon and charades, all blindfolded, mind you, all blindfolded.
Well, the road is littered with people that have underestimated Donald Trump, that's for sure. But now, just how big a difference in our economy would the deal with China that Trump's seeking make in the U.S. economy? And do you see such a deal happening before the 2020 election?
Well, I'm not sure how to answer that because I think it's unclear what kind of deal the administration is seeking. The terms have changed so much since the trade war started. It went from, trying to stop the dumping of steel and aluminum, and then it went to fighting IP theft, and then it went to China buying more agriculture. And same with China. I'm not sure what China expects out of this, except maybe something to do with Huawei, its chief telecommunications company. But when it comes to the agricultural front, which I've written extensively about at Liberty Nation, it's a big deal. It's a big thing that led to this escalation. If you look at the data from the General Customs Administration in China and then the United States' Bureau of Economic Analysis, you see actually that Beijing purchased record amounts of agriculture, particularly soybean, before the whole trade spat started. It's only been in the last year that imports have dropped. Plus, one of the reasons why China may have not purchased soybeans as much as it said is because the country is going through a massive African swine flu. The farmers are slaughtering their pigs and their hogs to stop it from expanding. So this also leads to less demand for soy feed. So in the end, do I think Trump is going to strike a trade deal? It seems like he's delaying it until a few weeks before the election, which of course would be huge because it would lead to massive gains in financial markets. Again, this is all part of the 4D chess strategy.
Our guest here on Liberty Nation Radio is Andrew Moran, chief economics correspondent for LibertyNation.com. So, Andrew, the U.S. is a democracy or constitutional republic, and China most certainly is not. To what extent can Xi Jinping wait out Trump, knowing he doesn't have to face voters the way that Trump does in this democracy? And could he afford, Xi Jinping, to hold out stubbornly for 5 more years and a second Trump term as opposed to 1 more year?
That is a fascinating question, and I've read actually a few viewpoints on this matter. The one main idea that I agree with is that perhaps Xi Jinping is also biding his time until the United States election to see if a Democratic candidate wins. Because if a Democrat wins, whether it's Kamala Harris or of course Joe Biden and his relationship with China, it would make it easier for Beijing to negotiate better terms for its country. My only dispute with that, however, is that any further economic contraction might destabilize the political structure, like you're seeing in Hong Kong with all the unrest occurring. Then also, there's another issue that I have trouble with, is that if you accept a Jinping's that can deal with an economic collapse, then the one thing that he could do is say that, well, you know what? Why doesn't China just sell its holding of U.S. Treasuries? China holds about $1.5 trillion of the United States debt. If he sold it off and dumped all that into the bond market, that would have a huge damaging effect on the United States economy and the government than just postponing a trade deal.
So let's talk about the world economy a bit here. Andrew, the U.S. is growing at a much higher rate with much lower unemployment than most all of the developed world. What effect does our economy have on the rest of the world, and what effect does the world economy have on the U.S.?
Well, I think what has helped the United States economy as well as the global economic structure and what's made everyone wealthy in the last 30 years is international commerce, foreign trade. The United States imports and exports to a whole host of countries all over the world. Businesses have such vast supply chains in today's marketplace, which is why the trade deal is concerning for free market fetishists like myself, as Joe Schaefer, our national correspondent, told me. If you remember Milton Friedman's I-Pencil essay and video, he highlights various components of something as simple as the pencil. Graphite from South America, rubber from Malaya, and all the thousands of people who've manufactured a single pencil. So I think it really is a two-way street that the United States needs the rest of the world, and the rest of the world needs the United States. You just look at steel as an example of this in the modern U.S. economy. As we discussed in one of our previous interviews, the price of domestic steel collapsed in the last year because the demand from steel-consuming industries fell. Now, these businesses relied on cheap steel for so many years, helping them make everything from aerospace technology to automobiles. But in the end, though, I think the United States has the upper hand because it has all the capital, both human and financial capital. The most recent data show that the rest of the world is also bullish on the United States economy because capital inflows have actually increased in the age of Trump, which I found fascinating because if you looked at all the years before Trump, capital inflows have fluctuated up and down, up and down. But if you see under Trump's tenure, the capital inflows have gradually increased. I think it was near the start of Trump's administration when he got that massive deal with that Japanese firm. I think it was a SoftBank. So the United States economy always has the upper hand in the rest of the world, but it's a two-way street.
Now, Andrew, I know you're not a fan of the Federal Reserve, but they do set interest rates, and they recently dropped the interest rate by 1/4 point, but the market was apparently expecting 1/2 point and reacted unfavorably. Did Chairman Jerome Powell and the Fed do the right thing or not?
Well, I think it was abnormal for a central bank to raise interest rates in the boom phase of the business cycle. If you've read my writing at least once, I'm a firm believer in allowing the market to decide interest rates. So I can't really answer if Powell did the right thing or not because the market can dictate that, not some a writer from LibertyNation.com. But I would say that it is further evidence, and I've written a lot about this also, that the Fed is not an independent institution. The central bank will take its marching orders from the White House. But as you can tell from the FOMC meetings and Jerome Powell's talks to the press, they still try to show a modicum of integrity and independence. But the Fed's lack of independence is not just Trump. And if you look throughout the history of the Federal Reserve, all of the administrations have partnered with the Fed in some way or another. Mariner Eccles, he was an admirer of Franklin Delano Roosevelt, and he actually petitioned the White House to help him somehow achieve the New Deal and get the United States out of the Depression. William Martin with JFK, Arthur Burns with Richard Nixon, and I believe also Gerald Ford, and then Alan Greenspan with Bill Clinton. So the Fed and the White House, they have such a strong partnership. So I get really irked when everyone complains about, Trump is threatening the integrity of the Fed when the Fed never had any integrity in the first place.
Okay, on that sour note, we thank you, Andrew, for joining us. Keep up your good work.
Thank you very much.
Andrew Moran, economics correspondent for LibertyNation.com.